Folks, I'm going to talk about something serious today. I'm going to talk about how we need to bail on two monster tech giants. It's time. It's time. Now, since the COVID-19 struck the world, the single best sector that's outperformed the overall market by nearly 2-to-1 is the tech sector. Not only has the Nasdaq 100 completely rebounded from the February crash, but the earnings expectations tell us that tech is coming out ahead of every sector aside from utilities, which is rather surprising to say the least, since the most market sell-off usually include the tech sector. Usually the tech sector eats it the hardest, actually, because it's got a lot of speculative stocks in it, and speculative stocks tend to sell off faster. Now, while most familiar tech stocks like Amazon, Facebook, and Microsoft continue to trade higher, near all-time highs as a matter of fact, there's a few tech giants that are starting to show cracks in the foundation, not only from a technical perspective, but from a fundamental perspective as well. And those are the stocks that I want to talk about today. If you're currently long these stocks, you may want to consider decreasing your exposure or staying on the sidelines till things improve. And based on my analysis, it may take some time. Now, the first stock on my list is a Wall Street darling, and actually one of my all-time favorite stocks. That's right. I can't believe I'm betraying it. The name of the stock is Intel. I'm sure most of you are familiar with Intel, ticker symbol INTC. Now, I know what you must be thinking. How could Intel, one of the greatest tech stocks in history, be on the chopping block? Let me explain. Looking at the latest 13F filings, we quickly find out that Nasdaq reports that a total of 1,055 institutional investors bought about 161 million of its shares in the last 13F cycle, whereas 1,425 firms sold around 206.9 million shares. This creates a net sell-off of about 45 million shares, amounting to about 1.1% of Intel's shares outstanding. But most importantly, it tells us that the number of institutions that sold Intel stock outnumbered those that bought it by about 35%. Analysts have been estimating measly revenues of growth for Intel for 2020 end of year and 2021, which is not surprising. Most importantly, Intel is no longer leading in the process chain. Taiwan Semiconductor has the advantage in the process, and AMD is gaining a massive edge on Intel. If you look at the fundamentals and technicals on AMD, the stock is actually gaining momentum and showing better forward progress. And most importantly, the stock is holding up better than Intel in this market. Intel is currently breaking the 200-day moving average, while AMD is not. And that's a significant factor, especially in the market where tech and chip stocks are leading ahead. Expect more downside from Intel. Folks, the second tech giant on my list is sadly Xerox. That's right, ticker symbol XRX. If you remember, Xerox was the corporate darling decades ago, but with COVID-19 keeping employees away from the office environment and focusing mostly on business instead of consumer market, caused Xerox to struggle in recent years. This COVID-19 was just like the last kick in the head. The world is printing less paper, and each year this trend is likely to continue. Folks, the world is getting digital. There's just no way around it. Xerox has done very little to diversify into other tech, and it's starting to make major impact on the company. Aside from showing 3/4 of negative earning estimates, the company has no buy recommendations. It's lonely out there, folks. Actually, there's 3 holds and 1 sell, which is not a positive sign. Most importantly, the stock is the second weakest stock on my CSI scan, only led by Nordstrom's, which is going through reorganization right now. While 82% of employees are expected to return to the company within the next 18 months, the future looks bleak for Xerox. And I would definitely add the stock to my short sale list for the next few quarters. I don't think it's going to be seeing any upside, and if anything, it may be a takeover candidate or a merger possibility for Hewlett-Packard, but right now I would just stay away from Xerox as far as you would stay from COVID-19. Hope that helps. Folks, the markets are being manipulated, but not by who you might think. It's not giant hedge funds or billionaire traders. Even they're falling victims to this new force in the market. You see, there's this important new change coming to the stock market, and it can completely kill every trading strategy out there. But what if I told you there's a way to profit from all of this while the big players struggle? That's right. We're talking about 70 to 120% gains in nearly a week. That's right, 70 to 120% in a week's time. Those are explosive gains. Click the link below to get all the info today. Don't miss out.